Hello guys, I hope you're doing well. Now, today we are here to discuss mock test paper 2. So, let's begin. Okay, now we start with question number 1. Sure. State with reasons when the following statements are true or false. The balance in petty cash book represents an asset. Yes, that's true because petty cash is nothing but your cash, so it is an asset, current asset. Second one, finished goods are normally valued at cost or market price, whichever is higher. No, it is cost or NRV, whichever is less. So hence this is false. Third one, subscription received for the current year shall be shown in the balance sheet as current asset. Subscription received for the current year should go to receipts and payments account. So therefore it is false. Then next one. When shares are forfeited, the capital account is debited with called up capital of share forfeiture and the share forfeiture account is credited with calls in arrears of share forfeiture. Again, it is credited with amount received on share forfeiture. And next one, discount at the time of retirement of the bill is the gain for drawee. Retirement of the bill means early payment of the bill, hence it is a gain for the drawee. That is true. And the last one, bills received and bills payable are types of subsidiary book. Yes, they are the types of subsidiary books. So question number 2, question number 1B. Discuss the limitations that must be kept in mind while evaluating financial statements. We've done this. Question number 1C. The following errors were committed by the accountant of Hariom Toys. Uh, 1 and 2. How would you rectify assuming that they were detected before preparation of trial balance, deducted after preparation of trial balance but before final accounts, and the difference was taken to suspense account? They were deducted after preparation of final accounts. So we have all the three what do you call it, situations, and we have to deal. Okay, now so you have BTB, ATB, and AFA. Okay, so the first one is purchase of 1620 from Anupam and Co. passed through sales day book as 1260. Now, so because sales is wrongly credited, so to we will debit to nullify 1620. Purchase is not debited, so now debit, and to Anupam and Co 2880. If it is detected in the second stage, can I say it will be the same? Because it's a dual side error, hence there's no suspense, it'll be the same. Now if it is next, it will be the same, just that nominal accounts will be replaced by P&L adjustment account. Okay, fine. The second one, credit sale of 1600 to Sony and Co was posted to the credit of their account. So here we assume only Sony and Co is wrong. Therefore, it is one-sided error. So if it is a one-sided error and BTB, now when you make credit sales, can I say you need to credit the sales account and debit the Sony and Co account? So instead of debiting, we have credited them. So it is a one-sided error. Hence, you go to Sony and Co and debit that account by double, so 3200. If it is a after trial balance error, so it will go to suspense, and lastly, if it is in the next financial year, then can I say only nominal accounts will be replaced with P&L adjustment, hence there's no nominal account, therefore it will remain the same. Now let's go to the next question. Question number 2. Messrs. JP Wise and Co. purchases second-hand machinery on 1st January for 3,20,000. Overhauling and erection charges amounted to 80,000. Another machinery was purchased on first on for rupees 60,000 on 1st July 2017 in the same year. On 31st July 2019, machine installed on 1st January was sold for 160. Another machinery was purchased and installed. Under the existing practice, the company provides depreciation at 20% on original cost. However, from year 2020, it decided to adopt WTV method and charge depreciation at 15% per annum. You are required to prepare machinery account for the years 2017 to 2020. So, in the books of JP Wires and Co. machinery account, okay, now, so on 1st July, sorry, 1st Jan 2017, you write to bank 3,20,000 you purchased. Another overhauling expenses, so you write to bank again, always show it different separately. Now, so can I say for this year that much is only the transaction, therefore on 31st December 2017. Ma'am, accounting year is 1st April to 31st March. Why are you doing Jan to December? That's because in the year they have given year 2017 to 20. So this means they want us to follow calendar year. Okay, so you have to be careful with this. They have told year 17 to 20, therefore calendar year. Okay. So now, so 31st March by depreciation. So it will be 20% on 4 lakh. 3,20,000 plus 80,000. So 4 lakh into 20% on original cost. Chalo, 4 lakh into 20%. So that is 80,000. Then another machinery was purchased on first. Oh shit, I missed that. So 1st July 2017 to bank, you have 1,60,000. So on 1,60,000, it will be 20%. So can I say 6 by 12? 7, 8, 9, 10, 11, 12. So that I think is 16,000. So then you have by balance carried down 464. This will be your balancing figure. Okay, then first one 2018 to balance brought down, you have 464. Then can I say on 1st July 2019, so that is next year. So again we will go provide depreciation for this year by depreciation. So it will be 4 lakh pay 80,000 and 1,60,000 pay 32,000. So it will be 112,000 and you will have by balance carried down. So your balancing figure should be 352. Then coming to 2019, 1st Jan 2019 to balance brought down 3,52,000. Now, what they are saying on 1st July 2019, machinery installed on 1st Jan was sold for 1,60,000. So whenever, so first is 1st July 19, whenever there is sale, you have to account for three things. So first, depreciation, then money received in bank, and you will account for profit and loss. Okay. Now, first cost price is 1 lakh, sorry, 4 lakhs minus first year depreciation was 80,000, second year depreciation again 80,000. So you will be left with 2,40,000. Third year depreciation for half year will be 40,000. So you'll be left with 2 lakhs. Sold price 1,60,000. Hence, I can say there is a loss of 40,000. Okay, so loss 40,000. Bank early money received 1,60,000 and depreciation 40. Another machinery amounting to 60,000 was purchased and installed on 30th September. So 30th September 2019 to bank 60,000. Okay, so year end 31st December 19 will provide for depreciation. So depreciation will be on 1,62,000. 1,60,000, that second machinery. So on that 20% 32,000 plus this 60,000, 10% 30,000. So 20% for 3 months. So it will be 30,000. Therefore, no, 1 second, 60,000 into 20%. So that is into 3 by 12. Okay, 3 months. So that is 3,000. So therefore you get 75,000. So on 31st December 19, my balance carried down should be 137. Okay. Then last year, 1st Jan 2020, to balance brought down, you have 1,37,000. Now on 31st December, when you provide for depreciation, it should be on written down value. Now see, you have one machinery whose cost is 1,60,000. First year you gave 16,000. Second year you gave 32. Third year you gave 32. So you'll be left with 80,000. So on 80,000, 15% for full year. One more machinery, 60,000. You depreciation 3,000. So you'll be left with 57,000. Full year 15%. So your total depreciation must come to 20,550 and your balance carried down will be 116,450. Sure. Question number 2B. Universal Limited keeps no stock records, but physical inventory is of stock is made at the end of each quarter, and the valuation is taken at cost. Company's year ends on 31st March, and their accounts have been prepared to that date. Stock valuation taken on 31st March was, however, misleading, and you have been advised to value the closing stock on 31st March with the stock figures on 31st December and some other information given to you. So they have been given information, some 5 points. You're required to prepare a statement showing amount of stock at cost on 31st March. So you write valuation of physical stock as at 31st March 2021. Okay, now stock at cost on 31st March 2020 is 2,40,000. 31st December they have given 2,40,000. On 31st December, stock sheet show the following discrepancies. A page total of 15,000 has been carried at 18,000. So less overcasting of page total. So 18,000 minus 15,000. So that is 3,000. Then a page has been undercasted. So add undercasting So 600. Invoice of purchase entered into purchase during the quarter 1st January to 31st March, total 2,10,000. So you have made purchases, so therefore your stock will increase. So add purchases. So you have made purchase of 2,10,000. Out of this, 9,000 goods relating to goods related to goods received prior to 31st December. So out of these goods are for last term. So you minus invoice entered in April relating to goods in March. Total two. So you have accounted in the next year for goods received in the current year. So you add because it is current years. So therefore you should get 2,13,000. Okay, then you have next one, sales invoice to customer total 2,70,000. So less sales, but you should not less sales, sorry, you should less cost of sales. Cost of sales, so it is 2,70,000. Now of this, 15,000 related to goods dispatched before 31st December. So before 31st December, I will minus. And goods dispatched to customer before 31st March but invoiced in April. So you have accounted in the next year, but it belongs to current year. So you will add. You get 267. If you can see, profit is given in the last line, 25% on cost. So less profit. 25% on cost means 20%. So minus 20%. So you get 2,13,000 again. So this will be minus. And last one, during the final quarter, the credit notes at invoice value of 3,000 has been issued to customer in respect of goods returned by that period. So there are goods returned, so goods will come back to us, therefore add. So cost of goods returned. So 24,000 minus, how much is this? Sorry, 3,000. 3,000 minus 20%. That is 2,400. So you should get 239,400. चलो, let's go to the next question. Question number 3. Mr. Z accepted a bill for 50,000 drawn on him by Mr. Y on 1st August, 3 months. This was the amount for which Z owed to Y. On the same day, Mr. Y got the bill discounted at his bank. On the due date, Z approached for renewal of the bill. Mr. Y agreed on the condition that 10,000 paid immediately along with interest on the remaining at 12% for 3 months, and the remaining balance Z should accept a new bill for 3 months. These arrangements were carried out. On 31st December, Z became insolvent and his estate paid only 40%. Journal entries in the books of Mr. Y. So in the books of Mr. Y, journal entries. Now, so you have on, so this is the year 2020, 1st August. Now, so you have drawn a bill. So bills receivable, account debit to said account, 50,000. With narration how exactly to present an examination will be given to you in the additional sheet. So you will copy from there. Now, this bill was on the same, he got it discounted with the bank. So bank may you will receive money. So bank account debit with 49. But for you, bills receivable is going out at 50,000. So the difference of 1,000 is discounting charges. ठीक है, चलो. Now, on the due date, Z approached for renewal of the bill. Now, can I say if on that due date, renewal of the bill is nothing but, can I say he's dishonoring? So if he dishonors, you should reverse the bill first. So on the due date will be 4th November. Z account debit to bank account. Obviously my receivable, my reverse will not be bills receivable because bills receivable is gone. Now the due date when it was dishonored, bank will ask money from my account. Okay, so bank will take full 50,000 from my account. Now it was agreed that Y will pay whatever is 10,000 plus interest on the remaining. So Z will pay us to, now first we'll calculate the interest. So out of 50,000, 10,000 he's paying immediately in cash. So balance 40,000 he has to give 3 months at the rate of 12% per annum. So can I say it is 1,200? Now, so for this 1,200, the journal entry will be Z account debit to interest account because this interest is a income for us. 1,200. Then he will pay us cash 10,000, 11,200. New bill, the balance 40,000 to Z account 51,200. ठीक है? Now, on the due date of the new bill, so what is the date? On 31st December, Z became insolvent. So on 31st December, when Z becomes insolvent, I have one bill pending against him. Reverse it. So Z account debit to bills receivable 40,000, and only 40% is recovered from his estate. So for me, it balance will be bad debts. So now for me, money will come in 40%. So 4 fours are 16, 116,000. The balance will go to bad debts account, that is 24,000, and you will credit to Z account 40,000. You have to write narration. So with narration, I have given you the answers. Please write accordingly. Chalo, question number 3B. On 31st March, goods sold at sale price of 30,000 were lying with customer Sapan, to whom these goods were sold on sale or return basis, was recorded as actual sales. So this is first case. Since no consent has been received from Sapan, you are required to pass adjustment entry assuming goods are sold on approval basis at a profit of cost plus 25%. Present market price is 20% less than cost price. Now, on 31st March, when there is no response from the customer and the due date is not yet over, so we pass two entries: one, reversal of the sale, and second, you have to account for stock lying with customer. So you write sale account debit, sale you're reversing, to Sapan account 30,000. So first I'm reversing the sale. Second, I have to account for stock lying with customer. So inventory with customer to trading account. Now this entry should be recorded always at cost price. So let's calculate. Now 30,000 is the selling price and profit is 25% on cost. So 25% on cost means, can I say 20%? So minus 20%. So you get uh, so you get so 6,000. So 30 minus 6, 24,000. Okay, and they are saying, so this is the cost price. They're saying market price is 20% less than the cost price. So 24,000 minus 20% will give 19,200. So cost or market price, whichever is there, so we will take market price 19,200, 19,200. See this, if they are saying 25% on cost is nothing but 1/4 on cost, therefore it will be 1/5 on selling price. So that is 20% on selling price. Okay, so please don't forget to do this. Very easy question. Now, 3C. Mira purchased goods on credit. His due dates for payment are given below. You are required to calculate average due date. Again, very easy. So due dates are given 5th August, 15th September, 10th October, and 5th November. So rupees is 600, 400, 550, and 800. Okay, transaction date, due date is separate. Okay, 1 second. Transaction date 5th August, for which it is 8th September. 15th September, for which is 18th October. 10th October, 13th November, and 5th November, 10th December. Okay, now number of days from base date. Base date will always be the first one. So first case will be 0, second case should be 40, then 66 and 93. So see, for October it will be 30 days of September minus 8 days and 18 days of October. For November it will be 30 days of September minus 8 plus October has 31 days and 13 days of November. And for December, 30 days minus 8 plus 31 days of October, 30 days of November, and 10 days of December. Okay, so accordingly you will calculate each of them. Then you will do the product. So first one will obviously be 0, then you should get 16,000, 36,300, and 74,400. So your summation product is 126,700, and this is summation amount is 2350. So your average due date will be 8th September plus summation product 126,700 divided by 2350. So you get 8th September plus 54 days. Now see, September 30 minus 8 days gone, so you will be left with 22 days. October has 31, so 3 and 51, and so November, well, September 30, 30 minus 28, October 31 days, so 31, 41, 51, 53, and 1 day of November, so 54. So you will be, your average due date is 1st November, which year? We have not given the year, so we will also write 1st November itself. Let's go to the next question. Question number 4. Sure. From the following data, prepare income and expenditure account for the year ended 31st December and the balance sheet as at date of New Max Hospital. So you have reception payments account and they have given additional information. Okay, fine. Now this question is for 20 marks. Sure, let's start. New Max Hospitals. So first we'll prepare income and expenditure account. Okay, thereafter we will prepare balance sheet. As at 31st December 2020. So this will be our closing balance sheet. So alongside we also have to prepare opening balance sheet. That will be in a working mode note. So balance sheet as at 1st January 2020. Okay, now as other working notes, as and when we need, we will write. Chalo. So balance brought down cash in bank. So it will come here, opening balance sheet, cash and bank 2006. Okay, first we should always read the adjustment. There is on building, hospital equipment, building fund, subscription, and investment. Okay, that's it. That's it. Okay. So subscription, let's open an account. Subscription account. By opening fee received, by opening outstanding, by INE, by RP, by TTTTT, to 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 closing prepaid, by closing outstanding. So RNP 19, 20, 21, 2550, 12,250, and 1,200. Fine. Government grants received for building, for maintenance, fees from sundry patients. Now, government grant has been received. So, what are we going to do? Government grant for building. Now, if you see building fund is there, opening. So, we will write first building fund opening will come here. Opening 40,000. And can I say building fund will come here also. Opening is 40,000. So add government grant 40,000. So my total becomes 80,000. Okay. And received for the second one, maintenance. So that will go to income and expenditure account to government grant maintenance 10,000. Next one, you have fees from sundry patients. So you write two fees from sundry patients 2,400. Then you have donation not to be capitalized. So to donation 4,000. And you have net collections from benefit show. So to benefit show 3,000. Okay. Then you have salaries 3,600 are for 2019. So when you write here by, see, everything good, but okay. So two salaries. Now salaries, do we have any other working? No. Salaries out of 15,600, can I say 3,600 are for last year? So for the current year will be only 12,000. And what belongs to last year was payable at the end of last year. Therefore, in the opening balance sheet, outstanding salary 3,600. Okay. Then hospital equipments you have. Now, hospital equipments 8,000. So we also have value of hospitals. So first we will go to opening balance sheet and we will write equipments. So that is about 25,500. So when you come to closing balance sheet, equipment is an asset, therefore will come closing balance sheet. So you have equipment opening is 25,500 less payment. So closing sorry, less payment 8,500. No, sorry, am I confusing? Okay, so less payments. So can I say you have 8,500, then you have made payments for hospital equipments. Therefore, hospital value of hospital equipment 31st December. Oh, okay, okay, okay. So 25,500 is not opening. 25,500 is closing. So closing balance sheet, you will give 25,500, and in opening balance sheet, you will write closing minus paid. So you get 25,500 minus 8,500. So you get 17,000. Okay. So payments. So again, it is a reverse calculation. Okay. Then for hospital equipment, furniture. Now furniture is no nothing. So directly only during the year 3,000. So furniture will go to balance sheet 3,000. Okay. Then you have additions to building 25,000. So they have given building on 31st December. So building directly on 31st December, I will write 40,000, or we'll just make a working note, it will be easier. Now, building, I have 31st December 2020 as 70,000. Now, during the year, purchased for building is 25,000. So let's find opening. Closing is 40,000. Paid during the year, so RMP is 25,000. So 25 plus 40 is 65,000. Okay. No, 1 second. Billing value, billing console. Closing is 70,000 and 25,000. So 70 minus 20 is 50. 45,000 will be the opening. Okay. So let's go and give the effect. So you have building 45,000 in closing balance, opening balance sheet, and 70,000 in closing. Okay, then you have furniture over, buildings over, printing and stationery. So you write in incomes and expenditure account. So to printing and stationery 1,200. Then you have diet expense. So to diet expense you have about 7,800. Okay, then you have rents and rates. So to rent and rate 150 is for next year. So prepaid. So go to current year balance sheet. Prepaid rent and rate 150. Okay. Then you have electricity and water charges. So current year will be only 850. So electricity and water charges 1,200. And investments. Now again, investments you have purchased during the year. So value for building over, hospital also over, building funded also over. Investments were made on 1st July. So investments you have here 10,000. Now they have told investment, they have given the percentage. So we will calculate the interest. Now 10,000 investments are made, so closing balance sheet will come. Now let's see, because their investment interest on investment They have given percentage, they have given date, so we'll calculate. But can I say they have not accounted for receipt of it? So therefore, we will account it receivable. So interest on investment 10,000 into 8 percentage for July, 1st July. So July, August, September, October, November, December. 6 by 12. So I think it is 400 rupees. Okay, so account it receivable and account for interest on investment in your this thing. So to interest on investment 400. Okay, chalo. And lastly, you have closing cash in bank. So cash becomes 700 and bank becomes 3,400. Now let's start tallying. Oh, interest on investment is an income. So by interest on investment 400, and I missed office expenses. So to office expenses, how much is that? 1,000. Now can I say first we will close the subscription account. So subscription, we have to subscription in arrears on 31st December 2019. So receivable opening outstanding 3250. Okay. Now, now we will assume this to be the closing prepaid here. 3250 minus 2550 is 700. Opening prepaid assume 0. So balancing figure will be income and expenses 12250. Okay. Now let's post opening outstanding will come in opening balance sheet. So outstanding subscription is a income, sorry, asset 3250. Outstanding subscription 700. Prepaid subscription 1,200. Okay, so subscription is over, investment over, billing fund done, value of hospital and billing also done. So now we will start calculating our this thing. So now here you should get a excess of income. So to excess of income over expenses. Okay. Okay. So after this, we will go and first close our opening balance sheet. So opening balance sheet will get capital fund as the balancing figure. Okay. So capital fund is 24,650. 24,650 we will come and write here. Capital fund 24,650. Add income 8,000. So you get 32,650 plus 80 plus 1,200. 113,850, and here also you should get 113,850. Let's go to the next question. Question number 5A. Which is from the following balance sheet extracted from the books of Vijay. So you have some, okay, and there are adjustments, and you need to prepare trading P&L and balance sheet. So let's start in the books of Mr. Vijay. You have to prepare trading account. Then you will need P&L account. And then you will have to prepare balance sheet. As on 31st March 2021. So let's start. Now first you have plant and machinery, so it will come in balance sheet. Plant and machinery. Inner column 39,100. Then you have furniture and fittings. Inner column. Then you have bank overdraft, liability. Then you have capital account, opening 1,30,000. Then you have drawings, so less drawings, 16,000. Then you have purchases, so we'll go to trading account. So you have to opening stock, 2 purchases. In a column, 3,20,000. Then you have opening stock given 64,500. Then you have wages, so 2 wages, 24,330. Then you have provision for doubtful debt, so we have to create further provision. So I'm going to write here do provision for doubtful debt. Opening, sorry, yes, opening 6,400. Then provision for discount, so do provision to provision for discount less opening, so 2,750. Then you have sundry debtors, so debtors 2,40,000. Then you have creditors 95,000. Then you have bad debt, P&L to bad debt 2,200. Then you have bad debts recovered, so you have GP by gross profit, then by bad debts recovery. So that is 900. Then you have salaries, expenses 45,100. Then you have salaries payable, so that is balance sheet item. Outstanding salaries 4,900. Then you have prepaid rent, that's an asset, anything 600. Then you have rent expenses that will go to P&L. So to rent 8,600. Carriage inward will go to there and carriage outward will come here. 2,700. Let's go write carriage inward. Carriage inward 2,250. Then you have sales. So by sales in a column 100, then you have advertisement expenses. So to advertisement 6,700, printing and stationery 2,500, cash in mind, cash in hand, that will be the balance sheet, cash 2,900, and bank 6,250. Okay, office expenses and interest paid on loan, both are expenses. Office expenses 20,320, and interest paid on loan 6,000. Okay, now purchase includes sales returns, so minus from purchase returns. So sorry, minus from purchases, sales return 5150, and this should actually be minus from sales return 5150. And sales includes purchase return, so minus purchase return 3450, and minus purchase return 3450. So sorry, purchase includes sales return, so it would have been minus. So now add back. Then free sample distributed costing 1650. So minus free samples 1650, and second effect 2 free samples 1650. Okay. Next, goods withdrawn for own consumption 7,000 included in purchases. So less drawings 7,000, and then you should add the drawings in the balance sheet. For the drawings 7,000. Next, wages paid for the month of April for installation of plant and machinery included in wages. So remove from there wages and add to plant and machinery 900, and come here, so minus plant and machinery 900. Then create a provision for doubtful debt and provision for discount on debtors. So provision for doubtful debt should be created at 5%. So my debtors balance is 2,40,000. So 2,40,000 into 5% is 12,000. So minus 6,400 already is there. So my further will be only 5,600, and PDD you should create after minusing. So 2,828,000 into 2.5%, so that will be 5,700. So 2,750 already existing. So you will create a further of 2,950. Okay. Now go to debtors. So minus provision for doubtful debt 12,000, and minus provision for discount 5,700. The amount will go to out call. Okay. Next, depreciation 15% and 10%. So 15. So you get 40,000 less depreciation at 15%. So 15% depreciation is 6,000. So you get 34,000, and minus depreciation at 10% only 2,050. So we get an amount. Now we'll add the depreciation here. To depreciation Plant and machinery 6,000 and furniture and fittings 2050. Lastly, they have given closing stock value. So by closing stock 2,50,000, which we will write in balance sheet as well. Closing stock 2,00,000. Now we'll start closing one by one. First we'll close this. So sales figure you should get sales figure you should get 4,22,000 and you will get here 3,02,750 and wages you should get 23,430. So therefore 279,070 is your gross profit. 279,070. Then your net profit comes to net profit 167,060. Then we'll go to balance sheet. Now your capital will be add net profit 167,060 to 74,600. So your liability side total is about 534,500 and your asset side debtors come up to 222,300 and your furniture and fittings come to 18,450. So even on the asset side you should get 534,500. Let's go to part B. 5B. Okay, the following is the balance sheet of Krishna Group. 31st March, they share profit and loss equally. Amit, Lalit and Sumit, general reserve, machinery, furniture, fixtures and cash. Receivables, inventories, trade receivables, PDD. Okay. Sumit died and the following argument was put. Asset to be revalued, they have given goodwill value at 18,000 and credited with his share without using goodwill account. 6,000 is to be paid to the executors of dead partner after death of Sumit. Sumit and Lalit share profit equally. You are required to prepare journal entry for goodwill adjustment and revaluation account and capital account of the partners. Now, first, before you do adjustment for goodwill, you will need to calculate profit sharing ratio. So OPSR is given Amit, Lalit and Sumit 1/3, 1/3, 1/3 and NPSR is given half, half, half. Or let's make it a little easier. So 1:1:1 and Sumit is time, right? So 1:1. So this will be 3, 3, 3, 2, 2. So can I say 1/6 and 1/6 is the thing, and he is gaining 1 by 6, he's gaining 1 by 6, losing 1 by 6, 2 by 6 or 1 by 3, whatever. Now, so goodwill entry. Now, who should compensate to whom? The gaining partner should compensate to the retiring partner his share. Now, goodwill of the firm is valued at 18,000. So, 18,000 into 1 by 3 will be 6,000. This should be given by Amit and Lalit in the ratio 3,000 and 3,000. So, our goodwill adjustment entry will be, who should get will be credited. Sumit will be credited with 6,000 and Amit will give 3,000 and Lalit will give 3,000. Okay, check. Next, they are asking us to prepare revaluation account. So, revaluation of assets and liability. So, now, first, what is happening? Machinery 35,100. So, machinery was earlier 30,000. Now, increase. So, we'll put here increase in asset comes here. Decrease in liability to machinery will come here 5,100. Then furniture is coming, so decreasing. So furniture is here 3,000 and inventory is here. Again, it is decreasing by 1,200. So therefore, your revaluation account gives you 900 for Amit, 300 for Lalit, 300 and for Sumit, 300. Now they have asked us to prepare partners capital account. So Amit, Lalit, Sumit, Amit, Lalit, Sumit. So first you write balance board down 24,600, 24,600 and 27,000. Then first you will give general reserves equal for all three of them. Then let's give revaluation profit 300. Then you will give goodwill to Lalit 3,000 and 3,000. This 3,000 Amit will give and this 3,000 Lalit will give. Okay, and here you will write goodwill. Sorry, Sumit, you will write 3,000 removed from his account and 3,000 from his account. Now therefore 6,000 is to be paid to the executor of him. So 6,000 will go from cash and balance will be transferred to executor's loan account. So that should be about 30,300 and then we will balance these two accounts also 24,900 and 24,900. Okay. So last question. Question number 6. Okay. Now, Deepak Chemicals invited applications for 10 lakh shares of rupees 100 each, payable as application 10, allotment 30, first call 30, final call 30, 30, 60, 90, 10. Okay. All shares were applied for and allotted. Shareholders holding 150,000 paid the whole amount due with the allotment itself. You are required to prepare journal entries for the above mentioned transaction, assuming all sums due were received. Interest was paid to shareholder concerned on 1st March 2021. Chalo. So only one shareholder is paying us in advance and he will get interest on calls in advance. Okay. Now let's start journal entries of Deepak Chemical Limited. Okay. Now first on 1st June itself, what is happening? You're calling for, you'll receive application money, bank account debit to equity share application. So that will be 10 lakh shares into rupees 10. So we'll write rupees in lakhs. So it will be 100 lakhs. Then you will transfer equity share application to equity share capital, 100 lakhs. And full amount of allotment. Then on 1st June, you will call for allotment. So equity share allotment to equity share capital. So it will be 10 lakh shares into 30. So 30, 300 lakhs. Now one shareholder is paying us in advance. So one shareholder holding 15,000 into the whole amount due. So can I say he's paying 90? Oh, sorry. Correct. He's paying 90 plus the other shareholders 15,000. Okay, no, we'll do, if we do it like this, we'll get a little complicated. Let's do it easier again. First in bank, I'll get 10,000 shareholders, 10 lakh shareholders for 30. Then this 15,000 shareholder will pay us even the 60 rupees. So total, I will get 3 lakh 9 and 2 equity share allotment will be only 3 lakh. 2 calls in advance will be 9. Okay. Now after that, on 1st November, I will call for first call. So share first call to equity share capital. So it will be 10 lakh into 30 rupees again. So 300 lakhs. Now when I will receive less. So in bank, to share first call, I will receive from 9.85 shares into 30. So this is 295.5. So this is 300. So the difference, this is 300 to share first call. The difference of 4.5 will come from calls in advance. Then on 1st March, I'll call for final call. Share final call 300 to equity share capital 300. Then we will receive money in bank. So bank again I will receive less. So 9.85 lakh shareholders into 30 rupees. So that is 229555. Calls in advance will be again 4.5. So 4.5, 4.5, 9. So 9 and 9 cancel. Okay. To share final call 300. Okay. Now the main thing is on 31st March we have to pay interest. So 31st March interest on calls in advance to shareholder and shareholder to bank. Okay. Now the calculation has to be done very smartly. Now you have received rupees 9. Okay. Now this is for two things. One, 4.5 for first call and 4.5 for second call. Now the interest percentage is 12%, but the months is important. Now can I say on the first call, we received on 1st June allotment and first call was due 1st November. So June, July, August, September, October. So into 5 by 12. And the final call was 1st March. So June, July, August, September, October, November, December, Jan, and Feb. So it is 9 months. So if you total, you should get about 0.63 for both together. 0. So this is your causal, occurs and causal advance. Let's go question number 6B. Tim Limited issued 10,000 8% debentures of the nominal value 10 lakh as the follows for 3 people. You are required to pass necessary journal entries. Okay. First one, to sundry persons for cash 90%, nominal value 5 lakh. So 90%, so you will receive bank to debenture application 4,50,000. This is 90% of 5 lakh. And debenture application discount on issue of debenture to 8% debenture. So 4,50,000, 50,000 and 5 lakhs. Okay. This is examiner's favorite question. To a vendor for purchase of fixed asset worth 2 lakh, 2 lakh 50 nominal value. So my fixed asset I have purchased for to vendor. I have purchased fixed asset only for 2 lakh. Okay, but I have issued debentures for 250. So my debentures are going out. 8% debentures are going out worth 2 lakh 50. Fixed asset is coming in of 2 lakh. Vendor. Payment of vendor is going 2 lakh. So this 50,000 is again discount on issue of debenture. And lastly, to bank as collateral security. So bank to bank loan 2 lakh. Now when it is issued at collateral security, you have two options. Either pass the second debenture to debenture suspense to debenture or show it as a footnote. So we show it as a whatever options you want, you can choose. State the cause of difference between the balance shown by passbook and cash book. So the cause of difference between passbook and cash book can be multiple things. Check issued but not deposited. Sorry. Check issued but not presented for payment. Check deposited but not cleared. Errors in passbook, error in cash book. So multiple items you can write: interest received, dividend received, check received but not recorded in cash book, direct deposit into bank. So multiples are there, so you can choose to write any 4-5. Which subsidiary books are normally used in business? As we know, the following are the types of subsidiary books. So first you have purchase, purchase return, sales, sales return, purchase, purchase return, sales, sales return, bills payable, bills receivable. Then you have cash and then you have journal proper. So you can write the list and then what they are used for. Like when you write purchases, so you should write used to record credit purchases of goods. So the same way sales, then you have 8 books, so write each of them and their names. This is already discussed in the theory, in the part which I have made you write in the class. So you can copy from there. With this, we finish our discussion of mock paper 2. Please study well. All the best for your exam. Do well. Take care. Stay home and stay safe. Bye, everybody.